In this video, we review Fidelity Investments versus Etrade. Have you used Fidelity Investments or Etrade before? What was your experience? Leave your Fidelity Investments or Etrade review in the comments section below. When comparing Fidelity Investments and Etrade, both platforms stand out in the brokerage industry for their comprehensive offerings, but they cater to slightly different needs. Here's an in-depth analysis of their pros, cons, and distinct features. Fidelity has a long-standing reputation as a leader in low-cost investing. It is often recognized for its affordability, offering no commissions on stocks, ETFs, and mutual funds, with a competitive 65-cent fee per options contract. Fidelity excels in managing long-term investments with lower margin rates compared to Etrade, making it a cost-effective choice for margin traders. For instance, Fidelity's margin rates start at 8.5% for large balances and remain competitive even at lower tiers, significantly undercutting Etrade's starting rate of 13.45%. Additionally, Fidelity does not charge for full account transfers, an area where Etrade imposes a $75 fee, which might deter users planning significant account restructuring. Etrade, on the other hand, appeals strongly to active traders and those requiring advanced trading tools. Its Power Etrade platform provides extensive capabilities such as professional level charting, one-triggers OCO order types, and simulated trading modes for practice. While Fidelity offers a robust desktop platform, Active Trader Pro, Etrade's tools are arguably more geared toward high-frequency and strategic traders. Etrade also supports overnight trading on specific ETFs, a feature Fidelity lacks, making it advantageous for traders who wish to execute trades outside regular market hours. In terms of customer service, Fidelity holds an edge. It offers 24/7 phone support, human chat services, and over 100 physical branch locations across the U.S., providing a personal touch that is unmatched by Etrade's more limited network of 29 offices. Fidelity also integrates AI-driven tools for portfolio management, whereas Etrade does not yet offer such features, potentially leaving tech-savvy investors wanting more. Mobile app performance is a draw between the two, with both platforms offering user-friendly applications featuring charting tools, market news, and trade execution capabilities. However, Etrade's separate Power Etrade app includes a demo mode for practice trading, which Fidelity does not provide. This can be a deciding factor for new traders who want to test strategies without financial risk. Educational resources are robust on both platforms, but Fidelity stands out slightly due to its focus on empowering long-term investors with extensive market insights and research tools. Etrade, while strong in this area, leans more toward immediate application, catering to traders who rely on real-time data and decision-making. Ultimately, the choice between Fidelity and Etrade depends on the investor's goals. Fidelity shines for low-cost investing, superior customer support, and margin affordability, making it ideal for long-term investors and beginners. Etrade is tailored to active traders seeking advanced tools, real-time trading capabilities, and sophisticated strategies. Each platform has its strengths and limitations, so evaluating personal investment needs is key to making the best choice.